that means we are now live here on our YouTube channel. It's our daily show we call the Halftime Report, where we go through the markets one step at a time, breaking it all down, talking about the news, talking about what's moving markets out there, hopefully to help you guys better run your daily routine. And Coach Tim Justice here to host the Halftime Report welcomes you out to the show. And let's start with coaches and pleasantries first. Mark, you first. How you doing today, sir?
Well, I'm running screen. I'm playing halftime report intros. I'm, you've given me a little task to do today. So, I don't even know how I'm doing because I'm trying to focus on the ball, right? So.
Anxiety picks up, Emily, and you got mute on as well. If you can come off mute there. How you doing, Emily?
Oh, listen, the people in the Justice Clan were not born with great multitasking skills.
No,
we weren't. When we do one thing, we do it really, really well. You ask us to chew gum and walk down that sidewalk, some things are going to happen.
Hey, listen, I've held a long-held belief that I believe multitasking is a lie, that 99% of people cannot do it very well, and they're lying to themselves and everybody else when they say they can. So I've felt that way my entire life. When you multitask, you're just not doing the one thing as effectively or as efficiently as you can, but maybe that's just my type, kind of over-the-top personality, Emily. I don't know. Let's get down to business. Are you able to bring screens up? Is that going to happen here this morning, my friend?
It's all a great mystery today.
It sure is.
Can we talk about the dollar today? Because he can't walk away from his screen.
Oh, we're doing deep currency analysis. There's no doubt about it. We're going to break down Forex cross pairs and all that kind of stuff.
Capital E.
What we are going to talk about today, the Senate just passed the $1.2 trillion infrastructure bill that's going to now move on to the House. We've got action in basic materials, industrials, financials, cyclical areas of the market are now healthily improving and moving in the right direction if you're a bull in those sectors, obviously. We've got some earnings roundup. Coinbase will have earnings tonight. And outside of that, we're also going to play another round of the Queen's Court. And I've got a couple ideas here, Emily. I get floated every week, so I'm not sure. Maybe I'll just go renegade and go rogue here and do something way off the wall. But hopefully you will like those picks. Emily, are you feeling choppy today?
I'm feeling very choppy today.
You are
very choppy today. Yeah.
So one of us are going down.
I'm cash flowing. I'm really bored, so I need to chop some heads today.
I see. Well, as we sit here and we're introing the show, I'll talk to the community out there while Mark figures out how to bring the screen up.
I know how to bring the screen up.
I don't know what's going on over there.
I was waiting to be told to bring the screen up.
Oh, look at that. There we go.
I see. But anyway, if you're out there watching the show right now, as you're coming on in, as always, hashtag Team Tackle right in the chat. Let's keep the conversations going. Love seeing you guys chat back and forth every day. It's one of the great things about this show, the community we've got. And welcome to new subscribers. Like I said yesterday, we topped 19,000 subscribers here on our YouTube channel, and those markers mean a lot to me. It's something that we've been putting a lot of work into. Hopefully you guys are getting a lot of value out there watching these shows every day. Welcome. And if you've not done it yet, click that subscribe button and click the bell. Come back and join us whenever we go live. Let's start with the broad markets. All right, Mark, here we are, fading, hesitating up at the top, but still a very healthy bullish market, bullish trend. Going to print another all-time high here today, at least on the intraday chart. What's your read on the S&P 500?
Now, entering this week, I thought the market conditions were healthy. When I do my Sunday night prep class, I said the most important thing this week, and I think we'll talk about it, at least I will in Queen's Court, I think you will too, is identifying rotation. The trends, listen, I got 99 million reasons why, I'm cautious in this market, why I like cash flow more than directional. And that's just not because I have a cash flow bias naturally, but the market itself, you got just a million moving averages underneath. You have a nice take a couple weeks off and then gradual higher. You don't see outlandish price action. I like when markets do this. I think they can produce some healthy results, particularly for difference trading. But, coming into this week, I was like, the most important thing to identify is not necessarily the market strength. That's there. We have the technicals, we have the trends, we have the breakout, we have the moving averages as support. We got horizontal old resistance that can act as new. All of that's playing out to start the week, right? All of that. But where's money going to be flowing? Where's money going to be flowing? Where is that? Because we've seen rotation be so important in 2021. Even last year, I mean, this market is not a everything go up market. It's a let's take a turn, and the cumulative result is to lift everything over time. That's where we've been for a long time now. Why is that going to change, right? Maybe one day it will change. I'm not going to guess when that's going to end. So, where are you flowing into? Where are you flowing into the money? Market trend itself is pretty healthy.
Real quick, give me a weekly chart, candlestick chart, if you can, just big picture. I think what you're saying here actually, it just gives you a little perspective when you do look at the weekly and look at quite a bit of time. You pull this thing back and just look at the healthy nature of the trend. You're going to stay with it. You're going to stay with what's working, cash flow, delta, a combination of both, the balance, whatever your approach is to markets. If they're working, you're going to stay with it. Emily, how are you approaching these markets right now? I know it's back to school time, getting the kids ready. You've also had a couple of trips. Are you cash flowing? Are you doing a little bit of both? Like what is your approach to markets?
Well, we are not back to school quite yet. We still have 2 more weeks before they are officially back to school. But I've kind of been still on this vacation mode where I'm not putting in as much time in the markets as I normally do. But even if I was, I think I'd still be doing what I'm doing now, which is just cash flowing. I'm doing a little bit of directional stuff, but cash flow has been working. So if it ain't broke, I'm not going to fix it. I'm just going to keep cash flowing until I cannot. Exactly.
And Emily, and you and I have such similar mindsets. It's why go for $2 when I got $1 that I know, like
it's going to be in my pocket.
Yeah, I mean, like if I'm going to put that dollar in my pocket, you can go stretch for 2 if you want. I like that 1, and I like the conditions to produce that. You and I have similar mindsets right now.
Good. So, all right. Very good.
Good.
I mean, here's the thing. There's nothing wrong with having a similar mindset and approach it with a cash flow. This is a good cash flow environment, good cash flow market in a healthy trend, even with the low volatility. There's still, are you guys still finding good credits with the VIX where it is? And with your watch this market, are you still finding good ROIs? Yeah. Good. All right.
If I recall, Tim, you've been waiting for the Russell to break out since I don't know when, July or June, and we've cash flowed 2 months now since that prediction of yours.
Waiting.
Emily loves giving you crap over that.
Well, I'm not long the rut, but that's fine.
Well, you were convinced it was going to break out 2 months ago, and we were like, nah.
No, it's fine. And I'm glad you guys are cash flowing. When it breaks out, I'll play it directionally. I mean, that's the beauty of having both perspectives, right? I mean, when you do catch your signals, you can run with them. And by the way, I love it when Emily gives me, a little trash talk. There's nothing wrong with that.
I love it when she does it on a Tuesday, 30 minutes before Queen's Court. I mean,
bro, I'm getting chopped. It is what's going to happen a little bit later.
We're both excited.
So we'll see. No, I've got great picks. We'll see if my analysis can keep me off of the chalking block. I do have a great pick for you there in the Queen. But Mark, you were saying, hey, I'm looking for an area of the market that's starting to move a little bit. I'll show you a couple. Look at materials here today, XLB, if you can. Obviously we've seen these type of cyclical areas of the market start to healthily kind of turn over and recharge.
I don't even want to go to the daily chart. The weekly chart's so pretty, right? I mean,
the weekly chart is good. Got back above all those moving averages. It really is developing nicely.
On the daily chart too.
Daily's a little bit of a breakout. I think this is an area you've got to be focused on. And there's many, many different companies in materials, specialty chemicals. You've also got some of the copper, type of companies. Freeport Mac is looking healthy. Southern Copper is looking healthy. Emily, you got exposure in materials yet? Is this an area that you've been looking at, or are you looking at?
I am not going to tell you because I know you're trying to fish to see if I have anything for Queen's Court. So you will find out later.
Fair enough. But the chart is developing. Another area of the market.
The chart is beautiful. If I didn't have exposure, I probably would be looking to get exposure in the materials here.
I think it's worth spending some time this week, at least building a couple of candidates on your watch list that have materials type exposure for sure, because it's an area of the market cyclicals are coming up. And look at industrials. The Senate did move forward the $1.2 trillion infrastructure bill, Mark, that now will go to the House and could take some time for that to actually become law. We don't know exactly how that political process is going to play itself out, but we do know that from a bipartisan perspective, it moved through the chamber, 70 votes, I think, something like that I saw across the headline. Industrial is another area I'm interested in here. Mark, what are you seeing in this chart?
I mean, I like the build up in momentum in materials, right? I mean, you have, genuine momentum where you can do pivot analysis, where you can do, look how the 9 just held. I mean, it's a beautiful chart. You know, it's going to take a on industrials. Can happen, right? But you have more of a, we got to force it the way up. You know, stuck in a range until you see some kind of things. But I agree with what you're saying from this thematic standpoint, like as far as, you know, you can see something coming, right? You can see something coming. You know, the materials chart is beautiful though.
Well, you tell me. I mean, let's flash through it as to what I think I'm seeing coming. Look at financials, you know, XLF. XLF had the same pattern 4 bars ago, and then it broke out and ran. Look at materials. We just looked at it, but go ahead and flash through them. Materials had the same pattern yesterday, and then it just broke out and ran. Now I'm looking at industrials. It's the one who's not broke out yet. And I'm like, okay, here's this cyclical area of the market. Where do I want to target for next entries? And there's still opportunities in financials and materials, but I think cyclical sectors are going to be on the radar this week. No question about it.
Without it, as part of that rotation, right? And trying to, it is somewhat of a guesswork in trying to pick when, okay, this is going to be the beginning of a rotational theme, right? I mean, obviously you want technical confirmation, but you know, it's hard for me to shake from my head that the unemployment report woke up the market in this area. The yields, the double bottom. Tyler did a great article in the Daily Email today pointing towards, you know, a double bottoming pattern in yields. You know, and so from a thematic, knowing the Fed's going to taper, on the backs of the unemployment report, I think it woke up this area, which is from a cash flow perspective. I'm like, I feel good. Maybe you get upward momentum, right? But you know, very possible actually, especially with the way some of these charts are developing. But like that stability, that feel good. I think there's something here.
Yeah, I do as well. You know, Marky, every time we go through the show, I always go through kind of my process. And one thing I asked whoever screen sharing to do is just flash through the indexes and tell me what they're saying. I'm gonna have you do that right now. Dow, S&P, Russell, anything from a strength, weakness, anything stands out at all. Let us know what you're seeing from
Let's
a
go to
technical
small
perspective.
caps. You know, so you know, because Emily brought up small caps. I mean, we're stuck in the middle of a range, right? We're stuck in the middle of a range, and this is not uncommon. You have a big sell-off, comes down to support, and then, you know, can something V-shape back up to the top? Sure, it happens every once in a while. And traders, you know, sometimes you're like, I can't miss out FOMO. This is not uncommon though, when you bounce off support and then take some time, right? You take some time. I mean, in fact, if you go look at all those wonderful charts we just looked at in the cyclical areas, you're going to find similar psychology at play. You come down, you sell off, you find some support level, and you normally don't just skyrocket to the top. It takes a minute for that negativity, for that enthusiasm to build up. Very, very, very common in this pattern. We go over to the Dow. You know, I'll just go look at the DIA, the ETF that mirrors the Dow on this one. You could go look at the futures if you wanted. I mean, we've been talking about that breakout, right? And I can't draw a straight line. That is why Toss invented the straight line tool. So if you can't draw a straight line, it will do it for you. Like we've been talking about the breakout at 35,000 on the Dow. Cyclical oriented in its index. Wouldn't be surprised if this rotation has any short-term legs, right? It doesn't have to last for 6 months, 7 months like the last cyclical theme did. But you could have some upward momentum. Pushing all-time highs there. You know, the big question in my head from an index top-down perspective is what do you do with tech, right? Because one of the things when we've seen rotation, whether slight, multi-month, or big time rotation, is that when one area does well in the short term, the other area takes some time off. Doesn't mean it crashes, doesn't mean that the end of tech is over, all right? But it can mean it gets stuck in the mud. We've seen tech do this before, especially if yields double bottom, you get rising yield. Doesn't mean the end of tech, but it could mean you get stuck in the mud. And so if I have long-term holdings in there, and this is just me, everybody free to do whatever they want, you know, and you're oftentimes going to have a long-term holdings everywhere. It is like the trick that I find myself and where I'm contemplating, it's like, all right, it's not that I get rid of my holdings if I love a company. It's, do I start cash flowing? Do I start selling, you know, maybe start with like, you know, lower delta covered calls? I mean, these are the questions that start formulating in my head. Do I wait for a signal? Do I wait for it to, heaven forbid, fall below the 20-day moving average before I do anything? at all. Do I, but I start thinking through the process. Don't go to radical action. Don't go to, oh my gosh, I need to do something today, right? Patience usually wins out in many aspects in trading and investing. But I start thinking about the process when I see a certain area of the market, especially when it's based on a theme that makes sense. Unemployment report, Fed, yields, all of that makes perfect sense to me. All right, so if I'm not cash flowing in a certain area, will I start to do so? How will that look? Will it be aggressive? Will it be conservative? This is the thought process that starts at this point. Doesn't mean I act upon it, but I do start entertaining those thoughts.
Mhm. It's interesting because you do have a momentum change in tech. There's no question about that. But a momentum change doesn't necessarily mean that you're going to have some major pullback or correction. It just means you have a momentum change. It could go into a consolidation, could set up another high base breakout. In fact, that level right there at 15.2, basically, I know 15.172 is the tippy high, but that could end up developing into a pattern. But what you do know is that it's not participating in the same way today. So in terms of running your routine, you look at cyclicals, you look at other areas until tech gives you something different. It could be as soon, quite frankly, the way this market is, it could be as soon as tomorrow, for all we know.
Delta variant spike, oh no, the yields climb and you get a breakout signal on tech, right?
Yeah.
It's why thinking through what you want to do, big picture, and waiting for signals before you act sometimes. That's why technical analysis can help weed out the noise. I was talking about this at the end of Sunday night prep class. If I'm just a trader, I'm not thinking about investments, just a trader, I don't even have to worry about the noise, yields, the Fed, and this. I base things on technicals. I can be frank, and I don't have to worry about any of that. But if you're investing, these are the type of things, because I want to maximize my returns always. And even lower delta covered calls can help me do that if an area takes a couple months off.
Absolutely. All right. Appreciate that, Marky. Let's now flash through the rest of the commodity market. And then I've got a couple of companies reported earnings today. We'll go through some of the numbers. Chart responses are actually kind of interesting. Couple of stocks in the news. Then we'll get to Queen's Court a little bit later in the show. Crude oil next here, the CL contract, finding some support between 65 and 77, essentially, is pretty much a long-term range there, Mark. You've got those lines drawn, support and resistance. What's your expectation when a commodity like crude hits support and bounces off of it?
Okay, and this is where the specificity of your technical analysis comes in. All right, I love playing off support, but there are different patterns you can do. In fact, I've talked about this, in different things I've taught recently. Not everybody is going to have the same entry signal. I love plays off support. Love them, love them, love them. What I don't love is when it V-shapes to the top, because I'm always going to miss out on that, because I'm going to wait for some level of confirmation at some point. So, just like we have a saying in trading, how do you play a breakout? Because there are different things. Do I wait for confirmation? Do I play on the first break of the resistance level? Different traders will have different answers to that question. How do you play a breakout? Some will require more stringent levels of confirmation. Others will be more aggressive. Same rule, same thought process applies to support. When I have something I like, and I like crude oil, I like reopening, I like all of these things. Now it becomes a question of, what do my rules say? How do I play it? What is the pattern I'm looking for? And that's where you're going to have a lot of variation amongst traders. Absolutely interested in crude oil, 100%. I just have to have the pattern I like, which would require multiple days testing of support before I get involved.
Mm-hmm. Yeah, there's no real directional trade here, obviously. There's some stuff you can do intraday, but there's no confirmation yet. You're talking about even just adding exposure through naked puts and all that kind of stuff, cover calls. So you're liking support. You're watching it test support.
And the problem with directional, and this is why directional traders, when things go sideways, they're obviously just like, I'm going to wait for the breakout, because it's tough to get directional signals without it hanging down here for a long time. Because let's say you get a little umph, all right, and you're like, oh my goodness, I'm going to play this little. Well, there's resistance right overhead. It's so hard to make risk reward work from directional standpoint. As you start to get momentum, well, there's the consolidation resistance right overhead, and so especially when you got fairly tight ranges like a $10, man, it can tough to be for a directional trader to use classic signals. Because once you start getting one, there's another resistance level right overhead. Now, sometimes you get them, these things are oftentimes consolidations are made for cash flow strategies and cash flow approach. But when you look at this, Tim, as a biased directional, you cash flow, but you're, directional trader, I think, first and foremost, like, what does it take for you? Like, I know Frank would say the breakout.
For a true directional trade, for me, it would need to eventually break out of the highs, for me to want to actually get aggressive delta. So, and by the way, if it shot straight towards the highs, then broke out, I wouldn't take that either. So this is long ways away from a new trade directionally. It just is. When you go into a pattern like this, it's kind of thrown the short-term directional analysis out of it. You approach it from a neutral perspective, and you look at things like crude oil bouncing off support may impact me taking a trade on XLE. Like if you look at XLE today, because it's been holding up, right? So there's a correlation between me watching crude on support.
And I think that's spot on, because crude oil holding support, if you can then go, especially in the world of commodities, if you can then go to your, gold mining companies for gold, silver mining for silver, energy companies for oil, like, all right, what do I got here? You might have something there, right? Crossing the 20, get a little confirmation. I like that. Analyze and then look.
There's a faster path to a trade in the energy stocks outside instead of the commodity itself, in my opinion. Appreciate the thoughts there, Mark. Fantastic. Let's go to gold next here if we can. And Emily, gold has taken it on the chin recently after that jobs report on Friday. Basically, everybody said, you know what? We don't want to own gold the next 3 days. They shot it below support. Technicals gave out, broke below 1800, quick trip down to the next support. Broke below that, quick trip down to the next support. We even had some algo stuff. That was a little flash crash on Monday, actually, real interesting intraday candle. Gold is just, it's a long-term gold holding. You're not going to do anything with those things. In fact, short-term volatility in gold should not impact the way you think of your long-term positions in gold. Did you have anything short-term with gold though, Emily, that now you got to reassess, or is this more just the same long-term investment you've always had?
It's the same. I probably look at my gold chart probably every quarter. It's one of those where I know I'm in it for the long haul, so it doesn't bother me. Mm-hmm. And when stuff like this happens, you just go find opportunities elsewhere. You guys are talking about oil, and I just went and sold a naked put on oil at 40. So I'll pick up the cash flow somewhere else if gold's not giving it to me, mm-hmm. right? You don't have to make money on gold every single day, right? You can always find it elsewhere, because this is a long-term investment for me. Now, obviously, we'll look at those levels of support that it keeps testing there at 1650, 1680. So, you keep an eye on that and you just kind of see what it's going to do beyond that. But for the most part, it's long-term. It doesn't bother me as much.
So you just sold a naked put on oil at 40 based on, that's interesting, because that's exactly what my Queen's Court pick was today. I was going to do a naked put.
Nice
good.
What month did you?
Nice try. I did the monthlies on September.
So 200 period moving average, all that kind of stuff. That's interesting. All right, back on analysis here for a sec. Quick look at Bitcoin if we can. Gold's just down near the bottom. There's nothing to see there until we see more time develop. Bitcoin though, Mark, we are range up now. It's been 1, 2, 3, 4. This is the 5th candle in a row. Now this is on the futures chart as well, and Bitcoin does trade over the weekend, so it's a few more candles that brought it up to this bar in that perspective, but we're a little bit range up after a very, very nice move. And we've had some news around Bitcoin in that Senate infrastructure bill. There's been a lot of chatter back and forth about what it means for miners and regulation and all that kind of stuff, but the crypto markets are still looking very healthy to me. Mark, what's your read on the chart?
And I pointed to the, change to the weekly. It just helps during these long periods of muck and then lift. I find going to the weekly chart helps me smooth out the noise, right? And not necessarily for specific entry points, but smoothing out the noise. If we can hold the momentum, right? I think it would be very healthy for Bitcoin if you do not skyrocket straight to the moon. Mm-hmm. Like you do that, all kinds of nonsense can happen on quick reversals. Give me more of this, right? Give me more of take a leg up, take some time off, let's stretch it. Give me some more of that boring, steady price movement. Bitcoin has been, pretty boring relatively for Bitcoin over the last 3 months. Mm-hmm. Producing nice technical patterns. Give me that. Don't you push it too far too fast, it can lead to quick intraday reversals, then selling begets selling and all of that.
Hmm.
Are
Give me
we
something slow.
are we officially out of Matt's box
We
on
are.
Bitcoin?
It's
Yes,
a
the
breakout.
box, we have left the box.
We're
We've
out of
left
the
the
box.
box.
Yeah.
Oh, see
Yeah.
that, sweet.
So give me something slow and steady, give a chance for moving averages to climb up, act as support, and then, hey, all-time highs could be in question. And I like the rate of ascension if that's the case. You know, I know Tom Lee from CNBC, who I greatly respect, like the guy so much. He's like, you know, fund strats like Bitcoin 100,000. You know, listen, it's 2021. Crazy price movement can occur. If you are going to see whether it is 50,000 or 65,000 or 85 or whatever it is, give me a slow, steady trend. Let's not try to get it all at once. And I think Bitcoin participants can be very, very happy and profitable during that time period.
I got one thought on Bitcoin, then I want to go back to gold actually real quick after my thought on Bitcoin, but give me like a longer term chart if you can, Mark, because I've been in the Bitcoin in the Bitcoin markets for a very, very long time, obviously. I mean, I started, you know, investing in cryptocurrency and Bitcoin like in 2013, a little bit here and there and back and forth. And then more over time, I started talking about it in my classes in 2015.
Our futures only go back so long.
All that kind of stuff. Yeah. And the last year is a microcosm as to why I have held Bitcoin and will continue to hold Bitcoin even in the face of 50%, 70% volatility. And it will happen again in the future. That's the nature of this product. In my personal opinion, I don't think it's grown past that. We've seen it recently where you're going to have a product that can go from 60K to 30K, and then it's going to test your resolve. That could have even dipped down to 20 or 10K. You know, I wouldn't have changed my personal approach because I don't trade Bitcoin. And I think there's for me, it's come down to this analysis with cryptocurrency that I much rather have position sizing where I want it, be comfortable with the risk assessments I've taken, and let the trends develop over time and not try to micromanage it personally. Now, other people do. And I know some really, really great short-term traders in Bitcoin, and there's all kinds of opportunities there. But just the volatility it's just a reminder to me as to why I do it the way I do it personally. But yeah, anyway, nice healthy trend developing off of those lows, and it's looking good.
And what I like about this Bitcoin chart, and I agree 1,000% with what you just said, you know, this could be Cisco, this could be a boring energy stock, and you know, you see these patterns on weekly charts, right? Go up, you know, if you just look at the short time, come down, break out a little bit. The price behavior looks very normal. Keep giving me that normalcy. You know, I don't need to have the price movement of late 2020, 2021. Give me that normalcy. Strong trends can last a long time. When things get overextended, it can lead to all kinds of nonsense.
Sure. Got a quick question for you guys on GDX, if we can back on it. Now, one of our veteran team members here, Brent Rager, asked a question while we're doing gold, and I didn't see it till it came in a little bit late. He says GDX naked put time, and we were talking about oil naked put, so I thought maybe we could answer this question. GDX naked put, so the gold miners he's thinking of. Mark, what do you think? Is there an opportunity in gold miners for a naked put?
Well, I mean, I'll just walk through the process I do, you know, in this situation. Do I love the GDX? Absolutely. Have I owned or sold naked puts on GDX? Lots and lots over the years. Yes. Will I continue to do? Yes. It's all about specific timing. Always start my analysis on the gold chart. And I just go through a simple process. We have a great horizontal support level, right? That's been tested multiple times. Even came down on Sunday night futures, stuck the landing. All right. I mean, this is support tested, has been tested multiple times over the last year and a half. So we got a known horizontal support line, and then I just go through the weekly and monthly charts to see if I got any supportive moving averages. I don't really on the weekly, not clear down to the 200 weekly, right? You know, that's still a ways away. Because I just want like multiple levels of support to back me up. Don't really have on the monthly either. So I'm trapped below a lot of moving averages on daily charts, on weekly charts, on intraday charts, even on monthly. I mean, I'm trapped everywhere in this process. So I got a horizontal support level, but I don't have some of those secondary indicators that I like to support me in this situation. So do I love GDX? Absolutely. And if I had zero exposure to gold, which many of us don't. I mean, a lot of us do at tackle trading. But if I had zero, I'd start entertaining naked put levels on GDX based on the analysis on gold. And so I'd go to GDX chart and I'd be that. I still would want ideally, and this is where patience come in, I would want something like this to form at the support level first. Take some time, and that's where, like, the quick naked put seller, I understand betting on support, but when I don't have secondary confirmation, I try to be very careful, even on stuff I love. And I would want at least you to come down, test that. I mean, one of these patterns that we saw a couple months ago in GDX, let the bears have their fun, let them have a chance to win. And when they fail, I'd actually prefer buying shares, try to get some upward momentum there in that situation. So it's a tricky situation. I mean, if someone said, I'm going to sell a neck and put a support, I'm like, I don't have zero gold support. I should be like, I get it. I can't really criticize. You got a support level. You're betting on an instrument you love. I just think there are some hesitancies, here on the chart right now. And I would personally prefer to wait for confirmation.
Yeah, that's fair. I appreciate you answering Brent's question there, Mark. And Brent, wonderful question. Glad that I got that one in there. All right, let's go on to the dollar here last. And really, the
I
only
don't
thing
even know the ticker symbol.
UUP is the dollar ETF.
What?
So you did know the ticker symbol. Did you know it? You did know
Not
it.
as funny if I said I did.
All right. So the only thing I really want to talk about with the dollar actually is the tapering podcast we had yesterday. The dollar's rallied up into resistance. We're going to have Fed meeting later in the month when it comes to, the Jackson Hole meeting. And then next month, we've got another Fed meeting. I saw some Fed speeches, Mark, just in the last 2 days. Fed chatter. We're going to be seeing this all month long. They're going to start putting this out there into the lexicon, getting it into our brains so that we're all aware of exactly what's going on with the Fed. Raphael Bostic out of the Atlanta Federal Reserve, president down there, he says, if they have the same labor market numbers over the next 2 months that they did in the last 2 months, it will meet the quote unquote substantial further progress that he's personally looking for. I did see another Fed speaker as well. I have to get his name, one of them, basically saying he's ready to taper as soon as he can. Mark, that podcast you did with Matt yesterday on the tapering, I thought the conversation was fantastic. Talk about it just a little bit, and I'll drop the link to the podcast in the chat for everybody.
The Fed, I mean, and I said this joke to Matt yesterday in the podcast, that if Jay Leno was doing what is tapering to 100 people on the street, you would get some very creative answers on that. But even if Jay Leno interviewed 100 traders, I don't think, the Fed and Fed speak and tapering and quantitative, you probably would not have, you'd probably get a lot of, individuals that don't have a good understanding of it. That's fine, right? We spend a lot of our time on charts, analyzing companies from an investment standpoint, breaking down portfolio management. And Fed speak for some traders is like this foreign world. I thought Matt did a great job yesterday laying out not only what tapering is, but the history of how the Fed has communicated with the markets in previous time periods where they've pulled back market support. Because the analogy, and I'm going to not do it justice on Matt, do it. Listen to the podcast; it's just really good. Matt's just such an expert in this field, But he gave the analogy of the drug addict, right? Like you wean off the support. Well, the Fed is the market's drug. All that free money, all that stimulus, and tapering being the process of weaning back that support all at once. I thought Matt did a fantastic job of explaining what tapering is, why it's important, and most importantly for me, like the history of it, how the Fed's communicated. Is must, if you're interested in this at all, and it's going to be in the market conscience, and you're going to hear and you're going to see financial analysts and news media talk about tapering. Get used to it for the next 6 months. It's just going to be there. Worth spending 20-25 minutes. Listen to that section where Matt talks about it. It'll give you some good understanding. It's definitely one of those educational, informative, with practical benefit segments. Matt did a very good job on it.
You're going to be hearing about it a lot, guys. I would definitely listen to the podcast, get some context as to what the markets are going to be talking about for the next 6 months, and specifically this month and next as Fed chatter ramps itself up. Thank you very much for that podcast, the interview there with Matt, Mark. Drop the link in the chat for everybody. All right, let's move into stock talk. I only got a couple stories I want to highlight here today and talk a little bit about them. Kansas City Southern, like the game of Monopoly, Emily. Apparently, you want to own railroads, especially if you're another Canadian railroad trying to buy an American railroad. Canadian Pacific Railway raised its offer by about $2 billion to 28, up from 26. They've been in a bidding war with Canadian National Railway. They both want to combine Kansas City Southern with their business operations to get a rail system that is going to get them all the way to Mexico through much of the U.S. as well. Both big businesses, obviously. This is a $28 billion offer. It's a reminder to me, though, Mark, as a teaching moment for everybody out there. When you got companies in acquisition talk, it ain't done until it's done.
Not done until it's done.
It is just not finished until it is completely finished. The deal is done, and we're moving into a new company's operations. So you got to be careful when you're holding, investing, trading any of these type of companies. This is a positive news story for Kansas City Southern, bumps their stock up a little bit, but these deals also can follow through. I've seen that in the past, just an interesting one. Mark, railroads. I think railroads are an interesting area over the next several years when I'm also thinking about infrastructure. Do you have any interest in the railroads?
Well, I mean, I went to the option chain immediately to see anything. Can't help myself. Listen, give me screen power. I'm gonna be like, there's a rabbit over there. I'm gonna go chase it for a minute. Listen, I get it, right? Like, I mean, this is one when you look at cyclicals, right? Let's say we all agree on the theme. Let's say there's we see rotational elements. We all agree. We're all going to gravitate to different areas, right? And some might be a little more right than others. But if you're right on the broad theme of cyclicals or this or that, you're going to produce a lot of winners across the board. So, it's like there's so many different areas in the market to chase. And I'm not an expert on railroads. I used to get into them a little bit. It's not my thing, so I can't really speak intelligently. But I do know that, a lot of times these broad themes can push the entire areas. There's some things I like. I can't share. There'll be option strategies that I wouldn't trust other.
Yeah, sure. No need to go down that road right now. Yeah.
Yeah, but yeah, I mean, I sometimes I like betting on a buyout, like holding through, especially when you got competing offers, right? It like just makes me think, it's like, well,
feels like this one is going to go through, but
because there's two offers, right? Like, it's like, well, someone's going to win.
Kansas City Southern's in the best position in the world. Oh, it's just more billions. Okay. You want to give me more money? You want to give me more money? You guys compete. I like this. I want two bidders at all things,
so
right?
If it just has that feel of like, and so like, anyways, I'm sure Emily could find a bull put spread here that she liked quite a bit.
Well, I could, but yesterday in our lab, we were looking for candidates that we could, do covered calls on a smaller portfolio. Somebody had posted a question, hey, I want to do covered calls, but what can I do? And we kind of went looking, and one of the areas of the market that we were interested in because of the whole rotational thing that we're seeing was industrials. And you brought that up earlier, Tim. And we did kind of go out there and find something that we could do covered calls on in an IRA account, and we found CSX. And if you pull up CSX today, it had a nice little pop today. And so it's definitely an area of the market that you could find some potential candidates, especially with the infrastructure bill getting passed, and just kind of seeing this rotation going.
That's a good looking chart. It's a good thing I brought this for Queen's Court today. This was
two of them you found.
No, I've got another great thing. I like the inverted head and shoulders on that daily, and the weekly's looking healthy. So CSX in the theme with industrials. Great that you brought that one up. I want to keep moving through. We've got several companies I want to go through the earnings numbers on and get to Queen's Court as well. Let's start with Marky. Let's start with AMC. Why not? It's the one that's in the news. I find it to be very silly in some ways, obviously, but it is in the consciousness. It's the meme stock that we all know it's become this year, no question about it. Q2 earnings of a loss of 71 cents per share on 444 million in revenue, Mark. That is less than the loss of 91 cents per share they were estimated, and they did generate more revenue than expectations. Revenue grew. Now here's the number, 2,250% on a year-over-year basis. Obviously, they were closed last year, Emily. They were not doing movie theaters, so that's an easy way to win and get a big revenue bump. AMC, they also, several things. I mean, they're talking about getting Bitcoin payment systems into all their theaters. it's an interesting, story from a human interest perspective potentially, but I don't really have much interest in a trading or investing perspective. Mark, what about you?
Listen, sometimes I get mistook because I like a lot of Kathy Wood stocks,
Mhm.
Aqua Bounty, I like a higher volatility. I like, I'm looking into Fisker Motor. I love Lucid, EV company, ChargePoint, Nano Domain. I mean, there's a lot of stocks of people where they're like, that guy, no, I like the company. And there's a reason I like the company. This is, when the history of this era of the market is written, there will be a huge section written on GameStop, Reddit, AMC, and this concept that occurred during this time period. It's unique, right? We've never had Reddit hijack stocks before. This is a unique period. Fundamentals are, these don't reflect anything resembling reality. And so it's high volatility, it's fun, it's message board. Some people have made some money, some people have lost some money, but we've left the realm of investing for me, right? Like, now, is there some price where AMC is where I'm like, yeah, it's worth a shot, right? Yeah. I took those shots, when we were doing Tries to Mix Cash start of the year when it was $4, right? There's some shot. At this, it's its own unique game. The Reddit game, the sentiment game, the message board game, and it's fascinating from a historical standpoint. It's fascinating.
And somebody might have an edge on that game, Mark, but it feels like a lot of people are just gambling.
And once again, could I spend my time theorizing and finding it? I don't have to. I got a billion choices. There's a reason I'm a cash flow trader. I don't want to have to obsess about this kind of stuff. I know it's overvalued, so I don't have to think about it any more than that. It's pretty much that simple for me.
Yeah, I agree. All right, moving on. Let's go on to, let's see here, Cisco. Let's start with SY. Let's go to SYY next. From AMC, who is a very complex stock, I would say the least, to Cisco, which is a very, very straightforward business model, food company here. They reported Q4 earnings today. They have their accounting cycle a little bit different. 71 cents a share, over 57 cents expectation. So that a very, very healthy beat on EPS here, Mark. They also beat on revenue, 16 billion over 14 billion. When you're a food consumer staple type company, that's a substantial beat on revenue as well, when you come in almost 15 to 20% higher than expectations. This was a very, very strong report from Cisco, and we're having a very nice price response. Mark, these are the more conservative areas of the market that you tend to build into your watch list as well as you're building your balanced kind of approach to the market. What is your read on Cisco? And then I'll get Emily's read on the chart here in a second.
Okay, when I look at a chart like this, right, up and down, I see it's not a classic consolidation pattern because we don't have those multiple tests of resistance, but we do have sideways price action for the going beyond 2021. I smooth that noise out, I look at it, blah, blah, blah. I see, nice sideways price action. I like going to monthly because I was like, it made sense. Came up to resistance, got slapped down. I got a lot of sideways price action. It doesn't prevent me from getting involved, but I just want to understand the context. I'm coming off, a support level, bounce, all of that good stuff. Haven't delved into their earnings report other than the surface numbers, but but it just comes down to for a company like Cisco. Like, I can trade everything. This is from an investing standpoint. This would put in the more defensive version, and so it has to compete with those defensive areas that I might be looking at. And while it might not be a defensive area, as I look at banks, as a boring defense. I mean, I don't want to mince words because banks has been trading cyclically. But it's conservative. Maybe that's the right word looking for, conservative areas of the market. And so that money got to compete with that money. And so, that's the process, right? Nothing wrong with Cisco's company that I used to follow extensively. Great moat Cisco has. There's a lot of good things I can say about Cisco. It just, does it beat out other areas? I mean, that's the equation that we're always making as investors, right? Does this beat out this?
Emily, I saw you lean in on this chart a little bit. Are you have any interest off the 200?
Well, I definitely like the chart. I like that it finally broke out of that range that it was in off of the earnings report. And like Mark, another reason I was leaning into it is because of what Mark just said. If you do not have any exposure in that conservative or defensive area of the market and you are looking for that, these are the kind of things that you're looking for, right? You can do an easy covered call on or naked puts, whatever. For me, I'm kind of looking at as this as a covered call candidate, where it's going to take some time for it to get back to those all-time highs, right? And you can just casually just pick up some cash flow over time. If you're doing this in an IRA account where you can tie up that capital, you don't need it, I wouldn't mind having this in my portfolio at all.
I'm glad I made it my Queen's Court pick today. I've got like 7
yeah,
Queen's Court
so
picks.
many of them to pick from.
That are all
You should get floated just for your shtick.
Oh goodness! But I'm bringing good charts, so we'll hopefully the analysis will stand on its own. We'll see. We will see. In fact, Jonathan reminded me, and I will ask my Queen anything before Queen's Court. My sarcasm is can that like get a pass?
Yes.
As long as I get a good introduction. All right. Because Jonathan reminded me, make sure you properly introduce the Queen, and I will do that today. I do want to talk about 2 more companies before we do that, though. Give me Nutrien next, if you can here, Mark. NTR, not a company I look at all that often. I was going through the earnings reports here today, and it grabbed my attention from a price perspective. It also, this is a crop input type of company. They provide, chemicals and all that kind of stuff for farmers to grow their crops in a more efficient
agricultural chemicals.
That's right. And one of the biggest in the world in that regard, Mark, firing off on their earnings. They basically came in line. So you listen to this, 208 over 209. So they missed by a penny. 9.8 billion over 10 billion. So they're in line, actually miss on revenue, but the stock is up big because they almost doubled their guidance.
I think CF, a company I follow, had similar misses, and it is having similar price response, down, shooting up even on misses. That's interesting. I got to dive into this, because if we are seeing, this has to do, because, misses
guidance,
have been punished.
It's guidance. They had guidance of 255. They raised it to 460 for the full year. So almost a 40, well, in fact, that's even higher, 70% increase in guidance for an entire year on a company that does this kind of revenue. That's a big deal.
Yeah, no, because and this is the part of the game, right? Because I view investing as a game, and maybe I form it that way because I like games, right? So make it a game in turn. This is a part of game I love, right? Because we've seen misses punished in this quarter, right? Just punished. The fact that they weren't punished means there is catalyst at play, countering a trend we've seen in misses in earnings. Means there's something there. I'm going to dive into these personally, CF, NTR, because if there are themes at play here in agricultural chemicals, it could mean opportunities.
Yeah, and they even bumped their dividend back up to its pre-COVID levels. So there's some good
chemicals. I've always, whether it's Mosaic or Potash, I've always had a agricultural chemical company on my list because it's unique. It is a unique subset in the market itself, where opportunities can present themselves regardless of what the market's doing. It's kind of Netflixy back in the day, because Netflix is more mainstream these days. But back in the day, remember, Netflix could go up and down. Tesla the same way. The last couple of years until it got indexed. I like industries that can just, no matter market trending up, market trending down, this thing does its own thing. I'll dive into this, see what I can find out.
It grabbed my attention. I'm going to put it on a watch list and dig into it a little bit more. And Emily, that chart response is still pretty healthy as well. So it might be worth a watch list and a little bit of a deeper look. Not a chase here today, not a chase at all, but might be a deeper look on this one. All right. Maybe one more. Give me triple D, DDD. Now, 3D printing company had a really, really back and forth stretch here recently. It's about the best thing I could say. They got caught up in meme stock mania there earlier in the year, Mark. They took off 12 cents a share on 160 million revenue, 5 cents over expectations. They beat. They came out with strong numbers, and you have a huge price response here. Mark, this is one of those high volatility, crazy, wild companies. I just saw this response. I wanted to dig into it, saw the beat. Anything here that grabs your attention?
Yeah, and I'm going to personally going to incorporate DDD as I've been diving into this. The thing I like about DDD has been the price action over the last year. Now, in many ways, it's traded like a lot of high volatility stocks, right? Huge blow off tops, huge sell-offs, rebound sell-offs. But there's been relative strengths. The bottoms have happened faster, the run-ups. it is separating. So many of the high volatility stocks have similar patterns. DDD, not one of these things, not quite like the other. And once again, I got to dive deep into this to see if there's legitimate catalyst or if this is just a funny play going on once again. But it's the thing I've incorporated and love about Cathie Wood: a vision for the future, a vision of transformative industries, transformative technologies into the future. 3D printing has had an up and down. When you go to 3D DDD, and I go back, over the time periods, you're going to see a lot of cycles, right? 3D printing's the future, right? You think this is the only time we've had, this is the future, this to the moon. No, 3D. Long before you had the last year of craziness, 3D was like, hold my beer. I've been here before, 2012, 2013. Huge blow off top, not sustainable, come back down. And then 3D printing was out of favor for several years, creating some interesting boomerang cash flow situations along the way. But it wasn't cool anymore, right? 3D printing's cool, 3D printing's not cool. A lot of it is going to depend on what your view of 3D printing is. The percentage in which it will grow as the everyday fabric of society, and then valuation, and does DDD have a good moat or stranglehold or market? There's a lot of factors in play here, but I do know price action that's interesting. Those questions can be analyzed and answered at a separate time. This high volatility stock is different than a lot of the others. Now, ups and downs still, right? Those are big monthly candles. But there might be something here. And there has been. Tyler brought this up on Trade Masters several months ago during the upswing. So there's been trading opportunities on this stock. Investing, you got to do your due diligence on this one.
Mm-hmm. Yeah. There might be something here with that kind of candle, though, Emily. What percentage are we up here today?
167,000%.
It feels like it might as well be. Might as well be. Now you're going to make me lean in 36%. You're not going to chase.
No,
no.
If you have not learned that lesson in high volatility stocks, you never done it.
That's right.
You don't chase. You wait for opportunities. You wait for good price action. You wait for good technical analysis, and then you can have some nice opportunities from a trading point of view in this area of the market. But rule one: don't chase. Don't chase.
Yeah. All right. That's it for Stock Talk. And now what we're going to do is we're going to move into the most important segment of the week where we hold the Queen's Court. The Queen is our royalty here at Tackle Trading. Queen Emily Mururi, the head of the Dynasty Investors Trading Lab, which, by the way, they meet on Monday nights. And I've been tracking the Discord channel. I know that you guys are having a great time in those labs. And I see a lot of great back and forth discussion about investments and cash flow and all kinds of things. Queen Emily joins us every Tuesday on the show here at the Halftime Report. And those of you who are veterans of the community, we do this each week. It's a lot of fun. The coaches get to submit a pick, and Emily gets to judge that pick, whether or not the analysis, the detail, the opportunity was good enough to pass for a week, or if they get chopped. And that chop is a chopping of the head. The executioner is not here, so we're going to have the old school
Matt
way of doing it.
Bring a big sword.
He showed it on Friday on the halftime show.
Showed it on. Oh, did he?
Yeah,
that's right. He did.
Yeah.
And now he's not here to use it.
He's not here to use it, but he'll be back next week.
I'll chop his head off next week for not being here today.
My queen, where do you want to start here today?
Well, let's start with you because you gave us that nice introduction. Let's go ahead and have you present your Queen's Court.
All right. In any kingdom, you need the stables, right? You need the staples. You need food. You need agriculture. You need mining. You need metals. You need all of those kind of things, construction, industrials, the same thing in the marketplace. But you know what else you need? You need a little old-fashioned entertainment, including gambling. Gambling's been around since the history of the world. And DraftKings is a company that I have been invested in for over a year now, after they started popping out of their SPAC merger in 2020, developing into a trend. It grabbed my attention. I'm a big football fan. We're starting football season coming up in front of us right now, which is the most important time for gambling companies, in terms of any other sport. Mark used to be a professional gambler. He can attest to that. When football's on, the casinos are full, people are betting, people are gambling. Now, what's interesting about DraftKings from a theme perspective, they just came off of earnings just on Friday. And let me start with a couple of just disclaimers. Number one, I own the stock. Okay. So I do. I've owned it for a long time. I don't write cover calls on it every month, because it depends on what the technical conditions are. That's the way I approach cover call trading in general. But I love the company as an investment because I believe this is one of those companies, Mark, you can't pin down fundamentals. The fundamentals aren't there. Just look at this week's earnings report on Friday. The company had a 76-cent loss instead of the 61 cents expected. They even lost more money. It jumped up, right? They're still losing money. They're a debt-driven company because that's the phase in their business model they're in. If you go back over the headlines of DraftKings over the last year, what have they done? Deal with the NFL, deal with this casino, deal with this state. They get access to different markets, whatever it might be. They sign a partnership deal with Michael Jordan. They sign a partnership deal with these different people. Even Michael Jordan got a stake of equity in the company as well for being a part of that partnership deal last year. That's when I got so excited about DraftKings, by the way. I see companies with leadership like this splashing deals, moving forward, even being debt driven. I know what they're trying to do. They're trying to change the nature of their industry. DraftKings has grabbed the attention of not just me. It's one of the favored stocks of like a Kathy Wood, those innovation type investment funds, those type of things. It's been out of favor now for the better part of 5 months, right? I mean, really since that uptrend in the spring, early spring, we haven't had much to go off on DraftKings. Here and there, things get exciting. They start developing. There's a couple things that happened recently that I think is worth bringing this one up. The technicals are improving. You've taken time off here. That consolidation has now pushed us up towards resistance. We're on the 200 moving average. It is not a directional trade today, okay? There's nothing about swing trading analysis that I'm bringing to DraftKings analysis today. I'm looking at this from a investment into covered calls when you want to type of play. I believe in the company. I believe in their future. I believe in the deals they're making. Just yesterday, they announced a deal with the Golden Nugget online casino, and they're buying them out. What that deal does for them, it's just one example of how smart DraftKings is. It gets them access into brick and mortar locations in Atlantic City and Las Vegas. I dug into this a little bit more even after our show yesterday. And it gives them access to start partnering with those casinos, to hit those sports books, to create advertising opportunities, efficiency and revenue streams in marketing. I love the deal. I thought it was a great deal for Golden Nugget. Obviously, the stock jumped up almost 50% on the news. But here's how you know the market also likes it from the DraftKings perspective. When you pay a premium for a small company and you acquire them, generally the company paying the premium, like we looked at Kansas City Southern earlier, right? Kansas City was the buyout target. Kansas City jumped up on the news over the last 6 months. Same thing Golden Nugget did. DraftKings should have dropped on the news. You would think if they were overpaying or any of that analysis. No. Investors loved the news. They like the partnership. They like the opportunity, and they believe in the growth areas moving forward. Couple of moments you could wait for if you want to be patient, my queen. You could wait for a breakout at 55, or you could wait for a breakout at 57 if you're looking for directional entries. There's a pivot point at 55 that is right on the 200 period moving average from a month ago. There's also another one from about 3 weeks before that if you need that. You could start out with covered calls. Go to the option chain here for a second if you can, Coach Mark. I appreciate that. Sitting at 52, if we just took a standard covered call approach, 38 days would be fine, 40 delta. You pick up $2.20 on that call. And can you, or even, 30, right there. 220 on a $52 stock is near 4% ROI. That's because the implied volatility of DraftKings is around 50%. This stock has IV built into it. So it's one of those kind of companies, Emily, that a trader like you, an investor like you, that has the ability to convert to cover call, to protect with put options. The option chain is very liquid, and it's got the kind of juice behind it that when and if it wants to fly, it's the type of stock that can absolutely fly. I like the themes that DraftKings has developed. I like the fact that even on a bad earnings report, they were talking about some detail that mattered to me. And I'll give you a few numbers here if I can. 1.1 million monthly active unique paying customers with DraftKings, which was up big from Q2. Okay. They had revenue grow 320% on a year over year basis. And as you might be thinking, well, yeah, everybody had that last year. DraftKings is an online gaming company. Anybody at home could have got on DraftKings and still did business with them last year. Sports were down, yes, but all their revenues are up big across the board. Monthly active users are up big. Payer retention on their key branding products like iGaming, which I looked into when I wrote the story for the Huddle on Friday, we're showing a lot of strong numbers as well, and growth. I like what they're doing. I like the management, and quite frankly, make it very, very simple. I think the deals they've been making for the better part of a year, as I've been tracking this stock as an investment, have been smart. They make sense for what this company needs to grow into its next version of itself. So DraftKings is my submission here for Tuesday, August 10th to my queen.
Great analysis. Thank you very much. Now we'll hear Mark's Queen's Court.
I've been bringing you some defensive plays a lot lately, my queen. And I'm going to continue to do that. Maybe not in a classic defense. This is going to be an area of the market that you love already. I know that. My biggest worry today, my queen, is that I'm going to bring you to an area that you already have a lot of exposure, and I'm not bringing innovation. But I'm going to talk about the financial sector and a couple of different ways to play it. And the reason that I personally am upping my exposure to financials, when I think about bearish themes and bearish storylines in the market right now, what do we got? Got inflation, right? Comes and goes through the course of 2021, but it's present. We're going to have more inflationary reports the next couple of days with the CPI and the PPI report. It's going to be very fascinating, but that's been one of the stories. The Fed tapering, not being as accommodative. That's been something hanging over the market, all year long, but certainly recently, and will continue to do so moving forward. You have increasing talks about companies' margins. How inflation is a real thing. Tyson Food CEO the other day said on his earnings, he's like, we can't raise prices fast enough to compensate with how fast prices are being raised to us. Talking about, real pressure on being able to push out prices versus, cost that impacts companies' margins. And so when I look, we got some bearish storylines. Now, they might not impact the market at all. They might be nothing burgers, but they, from a market totality, but they're there. Well, I want exposure to an area of the market that counterplays these. Now, I can go defensive stocks in general, but I want an area of the market, and I want to increase exposure in financials, because if inflation plays out and it pushes the Fed action, banks, rising yields, there's a reason banks went up on Friday and got a little jolt continuing today. They do well in that environment historically, and we've seen short-term evidence of that. Bank margins aren't impacted like a lot of consumer good companies, like a lot of companies that are facing inflationary. Now, yeah, you can have wage increase like you could in any sector, but a lot of the inflationary pressures that are out there, which could manifest themselves in a lot of sectors, in a lot of industries, in a lot of ways in coming quarters, banks have some insulation from that. And so the negative themes pushing the market, I'm not necessarily afraid of them, cautious, concerned, worried to some extent, but definitely paying attention. But I want to up area in a market that has got a little jolt off the unemployment area and makes sense as a play against these bearish themes, actually can be a beneficiary. So as my portfolio as a whole, if it gets rocked for a week or a month or a little time period because one or more of these bearish themes play out, I got another area of the market, and increasing my exposure to that area that can help balance it, maybe even benefit. Now, I'm so tempted, because the play I like the most of the company in this, from a lot of different perspectives, is one of your, I know how you feel about Bank of America, right? So I just wanted to point out, I really like Bank of America from a charting perspective. I think there's some there, but we're going to see a lot of similar analysis in a lot of different companies we go across. A lot of the banks trap below that 20 weekly, which is a significant area of resistance, starting to stretch our wings. So whether I go to JP Morgan or Citibank or Bank of America, I'm going to see some pretty similar patterns. Things that are prone potentially for some directional movement Not just, I think there are conservative covered calls you can do, but I also think there's some directional exposure in a theme. Now, the one I'm going to officially present you today is the, what is the kind way to put Wells Fargo? The least favorite child of the major banks. How about that? Well, you know, I could find some
perfect. Yes, that's perfect.
I could find some more derogatory themes, some ways to
that's
phrase
good.
it, but and the reason I'm highlighting Wells Fargo, because the logic of increasing exposures, not just to financials, to banks specifically. So I think this is an industry play for me, increasing to financials, but specifically in banks. For all those things. So all that applies to, pick your poison. What I'm going to present to you specifically Wells Fargo. I like a stock that's been beat up over the years, right? I like to give it some preference because I think it can outperform in the run ups. And we've seen a lot of that in Wells Fargo off the bottoms in March. Now, all banks have done well, especially since the election. Wells Fargo has had a good run, to say the least. I like the specific technical pattern and the room it still has to run. Let's go to a longer chart. I like that we are just surpassing those COVID lows, right? When a stock is out of favor in the short term, which Wells Fargo, due to good reasons, management decisions that they're working hard to rectify and create some of the solutions to the systematic problems that have plagued the company. I like when these turnaround stories, you continue to see evidence, and I like where it is in the relative valuation. I'm basically getting Wells Fargo in 2019 prices with evidence of systematic changes happening within the company, with pretty healthy earnings report this last quarter as well, like a lot of the banks did. I like the room it has to run on the chart as well. Now, Wells Fargo would not be my first choice today. Bank of America would be, but I can't even imagine how many shares of Bank of America you already own. So, I'm presenting a different, and I like the specific daily signals that are being produced on this Tuesday, August 10th. From I got to act if I'm going to act standpoint, right? Multi-month consolidation that occurred, breaking forth of that range starting on Friday, seeing follow through with a lot. Going to have some chop on the chart, right? Historic chop. But in the short term, a lot of clear air, clearing some of the major moving averages, which oftentimes can act as a little catalyst in some themselves, battling the 200 weekly, clearing moving averages along the way, clearing the 50 monthly, starting to have these long-term moving averages no longer act as resistance, but now acting as support. And that support is really close by. So even if I get a jolt in the short term for whatever reason, let's say yields plummet tomorrow because the whole economy is going to crash, I got some really strong support levels underneath, relatively close to the accelerating price I have now. Feels like one of those longer term position trades, great entry points, getting confirmation on monthly, weekly, and daily charts. I think there's still relative value. I think some of the systematic problems are being addressed by management. I think there's a lot of upside here. And most importantly, though, I think increasing exposure to financials is a reasonable tactical play right now, given the bearish themes in the market. I present Wells Fargo to my queen.
Thank you, Mark, for that. Oh, goodness gracious. I really, really, really wanted to chop Tim's head off today. And you were doing so well, Tim. You did your analysis on, on DraftKings. And I could tell how excited you were because you own the stock.
You can tell Tim loves the company.
I do.
Absolutely. I mean, you had me going and I'm like, okay, he's going to do it. He's going to get through it. He's going to get through the whole thing and not refer me as Emily. And then 1 minute before you're about done, you go, Emily. And I'm like, goodness gracious, what am I going to do with you?
Oh,
What am I going to do with you?
listen,
What am I gonna do
if
with
it's a
you?
respect issue, I deserve to have my head chopped off. I will take it.
However, Mark, on the other hand, starts off by saying that he's going to go and present something that I may already have exposure in. But you did have a really, really good analogy behind why to add more exposure to the financials, and I loved it. And then you bring up Bank of America, and I'm like, ooh, even better. Then you bring up Wells Fargo. Now, this earlier in the beginning of the show, we said if it ain't broke, don't fix it, right? So if I already have exposure to Bank of America, why would you try to sell me on the other sibling that's like, the one that you just cannot depend on? Now, I get that they're trying to do well and redeem themselves, but I probably would want to see more from Wells Fargo before I was to pull that trigger on them. And because I already have one child that behaves very well, I am not going to to ignore that child and give Wells Fargo some exposure here, especially when Bank of America has been working very well for me. But I understand where you're coming from in terms of I already have exposure in Bank of America, and you're just trying to give me a different stock to look into. But I love my Bank of America, and I don't. If I was going to add exposure, I'm going to add more exposure to Bank of America, and not add Wells Fargo to my portfolio. So. Oh, I really want to chop Tim's head off, but I love DraftKings. I love.
Do you like that opportunity on DraftKings?
I like it because I kind of put it off the side. I took it off my watch list because it just kind of fell out of favor, right? And it's just been doing nothing for the last few months. But now that chart is looking very, very pretty.
It's not very, quite there pretty. Yet. It's not today, right?
But no, not today. 55
I love
breakout. I'm in. Yeah, 55 breakout. I'm certainly in. And I don't mind waiting. I don't mind putting it on my watch list and putting an alert and getting, and getting notified once it does hit 55. So whether that takes a week or whatever, nothing, not a big deal for me. I still like it. Mark, I can't believe I'm doing this to you. I have to chop you off.
I understand. Listen, I support it because I love your, because my overall theme was add exposure to financials, and you're right. If it's not broke, don't fix it. There's nothing wrong with cost averaging up. Jesse Livermore famously said, listen, I'll cost average up all the time. He had some clever way of saying it, right? So if it's not broke, don't fix it. You see strength developing, and I think the counter trend. I should have known. I should have stuck to the thing. I support it. But I ain't sharing another screen the rest of the day, y'all, because I'm dead.
Well, I will give you a gift as we transition out of the Queen's Court. So, Mark, your head is now rolling down the hill.
It's rolling.
Your dead body is.
I just want
actually a stock market that I know you have interest in. I got a question from the chat. We're going to end on this one. Hammer Investments, one of our veteran Team Tackle members, brings up CCJ and has a question on it. Asked, do you feel like CCJ is starting to set up a little bit here? I do. I actually like the daily characteristics. I like the deeper pullback it's had over the last 3 months and whatnot. And then I do have a question on the option chain from Hammer as well, Mark. So give me your thoughts on the stock here.
Listen, CCJ is one of those, when you start to get some choppiness, I look at major moving averages. I've talked about this in my trading lab with Ford Motors. I've talked about this with lots of different stock. I can't think of that, but I'll bet on that rising 9 monthly, especially when it corresponds with general horizontal support levels that can be very choppy on a stock like CCJ. So there has been cash flow opportunities that I've been advocating. Bet on the support average move, all of that stuff. But then when you turn to potential more opportunities, right? What are the next level of opportunities? We are seeing a version of this pattern play out. Big sell-off in lots of areas, right? Lots of areas of the market. We are seeing support levels because we have a support level on CCJ. This is one of the 100 darlings that I follow on a daily basis. Got a horizontal support level, right? Pretty common in lots of areas. You're seeing in certain areas of the market a really tested, like let's pound it on the intraday charts over and over and over a couple week period. Support level form on CCJ, but this is not uncommon on a lot of areas of the market. I got a saying, I say it all the time. If bears can't win, support holds, there's only one direction for the stock to go. And that's why I love the psychology of this. And I referred to it on crude oil earlier. I love it when a support level gets pounded, especially after a big sell-off. Just happens to form a little bit higher than the historic support level. I love the psychology of it. And I love it a do-si-do on the 20-day moving average. Now you still have, and it's the nature of sell-offs, you still got junk up above, right? You got falling moving averages on weekly chart. I mean, just expect that to always happen. And so I usually, in these situations where I start to get some signals where I might want to go for some price appreciation, I'll still oftentimes sell low level delta calls, but you're getting it in this area in CCJ, not XXJ. That is CCJ's naughty cousin, XXJ. But on the daily chart, you're starting to get these patterns develop, not just on CCJ, a lot of different areas of the market. Tim referred earlier to XLE, some of the relative strength that you're seeing there. Similar pattern, right? Like which one is CCJ, which one's XLE? Little bit of strength, try to push it a little faster on CCJ, but you're getting the relative patterns. I like when these stability patterns form. I often play them in some form or another on my preferred companies. I got a lot of these to choose from right now. If I could only get them on the reopening plays, that exact pattern on Delta, could I just that's all I want, right?
Yeah. And another ancillary question here on CCJ, and go to the option chain if you can. I haven't seen this, so this will, if it's there, I'll be very, very curious to see this on CCJ. There was 100,000 open interest on the 25 strike in September. Somebody had a question about. Do you have open interest up here?
I don't think I do.
Can you flip Vega, for example? Just use one of those. Just do open interest real quick.
For September?
Yeah.
100,000 on the 25.
That's interesting. I mean, it does trade a lot in the chain, Mark. This is a very liquid option chain. Does that concern you at all? Or do you think maybe that's just covered calls from some big investor?
I mean, a lot of solutions, right? CCJ is the largest uranium mining company in the United States. I think there's some in other parts of the world that are bigger. But as far as publicly traded things, I mean, CCJ is, it's a big company. It's a big company. Maybe not, tech size, but for its space, it's the largest miner in the United States. That's high open interest, though. There's without a doubt. That's not usual. One could speculate on a million reasons, right, on why it is.
Yeah, but it's not 100K against 200 in every other strike. I mean, I see 44,000, 11,000, 25,000. It's more. And
we could speculate.
Yeah,
I mean, we could speculate on reasons, but
we don't know.
It doesn't concern me.
No, no, not at all. The opposite probably gets me interested. It makes me want to.
Yeah, right. It's like somebody knows something. I mean, that's the conspiracy person in me, right? Somebody knows something that I don't. Maybe I should, maybe I should not sell that low delta covered.
I love it when your brain starts working out loud. So we're. Do you want to now go directional here on CCJ?
No, I'm just saying that's how my brain works.
All right. I know you. You're going to pick
cash
cash flow. You're going to pick cash flow. It might just give you more confidence in your cash flow if you find it.
I like these patterns though, right? Because even if I get stuck on a signal where I'm trying to push against trend, I got support levels underneath, rising moving average. I got a lot of stuff that can hold support that can allow me to roll down calls, do all kinds of stuff to manage it. So CCJ has been a good stock for me all year. I don't see that changing anytime soon.
Last one, then we wrap up. Jeremy Johnson, my man out there, hashtag Team Tackle. Jeremy, great to see you again. Since we're talking banks, give me thoughts on PAC W. And last one here, Mark, then we're going to wrap.
I don't have any specific, I'm not a company.
Nice reversal chart.
But, it is, consolidation. Listen, it's me. And I think Emily, I mean, I don't know, I'll speak for you because, the second I got my head chopped off, you become M, because my, but I mean, you always love financials, right? And, are you looking at more exposure in financials? Maybe PAN W might not be your choice, but like in general?
it goes back to what you said earlier, right? We like the space, but it's competing against other, right? I have the capital to put in financials, but now this has to compete with Bank of America, even Wells Fargo to some degree, right? Or whatever other banks that are out
Citi or
there, other
JP
financials
Morgan
that
or
are right.
Zions or like
Any one of the keys is a nice cover call stock that we have on our Tackle 25. So it has to win against all the other ones that I know, like, and trust before I can say it's a yeah or nay for me personally. But I like where it's sitting at. It's at that moving average. It's about to break that resistance level there. So if it's a company that you like, I wouldn't see why not. But for me, it has to compete against everything else that I already have on my watch list in financial.
Yeah, because I mean,
it's
like,
good looking setup though. So
yeah,
if
it's
it
like
does,
anything, like, you like an area, Bitcoin, banks, whatever it is. I mean, you still are going to cap out somewhere, right? You're still going to cap out because it can't become the monster in your portfolio that you're so
because then you're not position sizing accordingly. You over leverage in one area of the market over the other. Yeah, so you still have to have that balance.
And so you can have overexposure in an area, but you can't like let it consume your account. So it's that competition within the space that the PanW is up against.
Yeah, well, and financials are hot. So if you go through your watch list and PacW has a place there, I wouldn't have any criticism.
I mean,
for
once
that,
again,
so,
I don't know the company well enough to say yes, no, or why from a fundamental perspective. And that can be a tie-breaking decision. Technicals, fundamentals, your personal. There's lots of factors that go into who wins that competition.
That's fair. All right, guys, that's our show here for a Tuesday. And as always, thank you, Mark. Thank you, Emily, for the analysis, the insight, and the fun here today. Appreciate you guys out there. Hashtag Team Tackle. Marky, any programming notes for the rest of the day? Anything you want to make sure that people highlight?
Listen, we're going to have a panel discussion, Coach's Show. Gino, Greg, Tyler. All three of them are going to discuss portfolio allocation, that competition we've been talking about a little bit on this theme. It's on my mind lately, and I think it's relevant in a rotational market. You're moving money from one area to another. What are some of the rules that should guide you in the construction of that portfolio? How does it apply to trading? These will be some of the discussions tonight on the Coach's Show. Full panel tonight.
Fantastic. It's 8:30 Eastern. You can find that on the events calendar at Tackle Trading. Make sure you join our coach show. And if you're not yet a pro member, to be able to go to those shows, you can get a 15-day trial in the comments and description of every one of our YouTube videos. We always have it in there. Or you can go just right to tackletrading.com. There's a link right on the front page or in the store. If you ever have any issues at all, team at tackletrading.com. Coach Mark will take care of you. He does a great job in customer service for us, helping our community. So we're out for today out there. We'll be back tomorrow, same time, same station. Have a wonderful rest of your Tuesday.